All right, running a little bit behind today, but we will be making the call pretty quick here. Sorry for a delay with everybody. Hmm. Interesting. I'm not seeing the streamer in here. Why is this not working? Hmm. Ah, that's why. Apologies for some technical delays here, guys. Be right back. Having a couple technical issues, but we'll be online in just a moment. Yeah, I might have to run without Matthew this morning. Welcome back for another week of the watch list. I'll probably just run my screens today. I don't have a setup for a very good scene on my own yet on OBS here. Otherwise, it would probably look like this. Be kind of not quite right. I don't have the right boxes here, so I'm going to run it with just my screens. Anyway, it's been kind of an interesting week here. Let me start by leading right into QQQ here. Let me go to a single grid and get this underway. So daily candles have been kind of hectic, and we've been in this bearish trend right to about a reversion target. And I like to watch these on a 2-hour chart to plot them out. We get into the low here. There's a liquidity zone way down here. I don't know that we're going to hit that, but if we do, well, it's there for future reference. We know where the buyers were in that scenario. This whole trend gave us a big old double bottom after this bearish trend, of course, walked up this thing. And it's kind of funny how half back seems to be the rule of the land when it comes to charts. And we've got this thin band of liquidity right in here, and we've set up a little bit of a double bottom after our descending channel here. We did get our measured move out of the channel. It reached it, rejected it, and came down bearish like a ton of bricks right to angular support. Yesterday we hit that low on the open and then came back for a regression line reversion, essentially closing that bar on the 2-hour chart just under that 462 pivot, which we've been watching quite quite profusely. We've been keeping a very sharp eye on that one. Long story short, we're printing L2 of a double bottom here on this halfback, and we're looking for a swing back above our regression line, possible today or tomorrow. And maybe we get a reversal here and resume some bullish trend. But historically, this month is typically red. So everybody's kind of in the mood to short this. And I don't know that they're going to be right or wrong, but we're looking at support here. It's kind of happening. We'll watch this close for this bar here, and we'll see if maybe we got a chance at resuming back into at least an attempt to break back to that 462 pivot. Maybe even extend it back to our opening range high here up through this liquidity zone here, represented by this little doji here. We got some buyers that were here the other day, and then we had some sellers in that zone once we opened the previous day. So looking at today's Thursday, it's Wednesday, Tuesday. Yeah, counting back. So anyway, we're looking for a possible pushback through this resistance area, or give half this trend back, so to speak, whichever. We did already hit that on the open this morning, and we scalped the living tar out of that this morning. Did very well for our team, and went from zone to zone. Even got a chance to demonstrate wolf waves and measured move blocks. Everything kind of went very well from a teaching aspect as well as a trading aspect this morning in this range. And it's so far looking like range from LZ to LZ, baby. So maybe look for a midday swing back to about the middle of the mix here into this. Let me reframe that. Probably right up to about there in this range for a midday swing. If we can break back above it, cool. We got a good shot at hitting that opening high again. But if not, well, look out below, guys, because if we crush this zone here, we've got quite a bit more downside to get. If this double bottom fails, we have some pretty steep candles in the previous trend here. We could see things drop as low as about 451 or so on QQQ. So be nimble in this market. It's as we said, historically, seasonality says this month is typically red. I don't know. We want to wait and see what happens with this zone first. You don't trade anything but a confirmation is what the best scenario would be. And if you're going to scalp it, go ahead and scalp it. The trading range has been great, so we know what that's all about. All right, kind of moving on. Flying solo again, so I'm kind of not necessarily at a loss for words, but it's not as entertaining without the witty banter back and forth. But we'll deal with it. And I'll try Matthew again later on in the show and see if we can maybe get him on for his side of things. But let's look at stuff on my list right away. Let me get into that. I have a few that I'm kind of skeptical on, but I think they showed up on a breakout alert and may have a chance at giving us some good trend trades coming up. And then I'll review last week's too. So first I looked at Delta. We have Delta Airlines with a nice bullish open, went right to the top of our zone, closed a bar, came back, basic range trade. We're all over that. We know this zone has been kind of ranged before, and I think there's a good chance of resistance here, maybe giving us a short back to about half this trend here. Maybe we could see a ride back down to about $40 or so, and possibly we get back to this open here and maybe creep back up into this liquidity zone. But let's look at what market structure tells us. We have this range that's been kind of trending along this long trend line for a while. Let me turn off my TD sequential here. And effectively we came back through this angular, back through this key mean pivot area. This was a previous mean reversion target. We didn't ever quite reach this 1 or 2 for 1 here, but we did get a 1.5 and a rejection. Clean return to reversion trade. And now we're kind of looking for a bit of range before we get a trend. So if we hold half back on this, or we do breach this by some miracle, we accumulate here and give us a full 1 for 1 up, measured move wise, we could start to trend here. So this is going to be our key area to watch. It needs to break like 43.50 to really get into trend mode. If it rejects that, we got a pretty easy half back short. So day traders will be all over this. And Realistically, I mean, there was a little bit of a news pop on this thing, but it doesn't really hold any significance as far as I'm concerned. I think we're going to stick in this zone until we figure things out. But looking at this daily trend here, we end up with another target that can kind of possibly emerge if we do break this zone. Half back is kind of in a range here, and typically when you see those tall wicks sticking out of something that's been in a trend, you have liquidity zones. So there's a good possibility of maybe approaching this zone if we can break this liquidity area here. So definitely some good swings on this. Can't really say if it's going to be bullish or bearish in the long term just yet, but I think we should be watching it, and I think we could get a couple good range trades out of it in the meantime. Some intraday swings, possibly some debit spreads can be traded pretty well in that. Moving on down the line, this one kind of showed up and surprised me. We have MDT here, Medtronic. Probably a little bit of a news pop on this thing. It's kind of a long-term, dividend queen. It seems to be a pretty decent player. Looking for a reversion on the weekly chart back to this range here. It's set up for a primary, already done and accumulated. It broke back above its liquidity zone from this range here and just opened with a breach of half of a one-for-one measured move here. If we can continue this trend, outward targets are about $96 or so. And if we start to accumulate in that range, we look for a reversion of this entire trend, high to low. It's right in the middle of this zone, so look for possibly an extension target of about $98, give or take. And it's set up pretty nicely. This was on our breakout scanner yesterday, and it broke this range, did very well. And now we're just watching the price action. So short term, looking for maybe a half back on this previous 3-day range here. So we'll look for a quick pivot touch right in here, about 82.30 or 89.30 or so, give or take. And we'll see if we can hold support here and continue higher. If we breach that, well, we'll probably head back for this liquidity zone. So this one's looking bullish overall, but just be aware that it can give you a couple of quick bear scalps in between. That's kind of, the norm. You end up with some price action that gets a little bit of an impulse move, and oftentimes half back is the rule. In fact, I always tell people to kind of tape that to their monitor on a post-it note, half and whole, because half back is very common, very easy to trade if you know how to find it. Let's see here, moving on a little bit, and always feel free to join our chat live here on YouTube. If you want to ask a question about a ticker or give us something to look at, or even just to say what's up. We love feedback. We love talking to people. And here at Bullish Bears, we're a pay it forward kind of community. So we're like the call-in show that would actually provide help instead of just hitting a soundboard and telling you to buy or sell something and making a bunch of noise and jumping up and down. Yeah, we don't do the Kramer thing here. We do our own thing. Another one that really caught my attention yesterday was PayPal. And PayPal, we've been watching this thing for months, and it's just been kind of crawling along. Weekly market structure. And we see this all the time. Things rage, get a massive hype pop, and then they give a reversion. We had this accumulation here. Drop down, hit these lower levels. Very typical stuff. This is all capitalization after the hype wave pushed it up. Accumulation is very typical afterwards. And we get a couple of things that'll happen. One, we always look for, once it's breached this low in market structure, we look for accumulation and we look for short squeezes first. Didn't really have much of one here or here. So this could be our first impulse for a short squeeze happening here. It did get a little news pop, whatever. But typically, if this follows through and breaches that resistance zone, we usually get a quick shot at the next liquidity, which is probably around $85 or so. $75 is the limit line. It's got to cross that. And then if it gives you a really good boost and starts to take on some bullish momentum, you get a $10 scalp out of that. And that's pretty good for swing trading some debit spreads. So keep an eye on that. Be a little skeptical of this $75 resistance though, because it can reject and give half this little trend back. And I'm going to zoom in on that and give you the skinny on that. So essentially we have a really nice measured move play here where we've accumulated in a range, and range bound is good. All ranges tend to break, and we just need to wait for the break and trade it. We can scalp a bearish move back down for a mean reversion, which ends up landing right in this old zone here. Or we could hold this range and accumulate a big old bull flag and then sail on through that $75 range and carry on with the trend. So definitely keep this on your radar. We've been kind of looking at disruptors in this sector for a long time now, with the banks kind of doing what they do. The regional banks getting chewed up. You might have seen Wells Fargo has just been on a tear, eating up a lot of liquidity out of that market space, so to speak. And eventually they're going to have to come to grips and pull back and give the old half back. So keep an eye out for that as well. And I'll get to a Wells Fargo chart in a moment, but I wanted to show you PayPal first because it's kind of the disruptor in the banking sector. I mean, it acts as a very fine median for passing money back and forth between people and entities. So, transactions, of course, cost money, and that's how PayPal makes their money. Long story short, we should see this as a disruptor sooner or later. Very, very similar to SQ, the old Block. I guess they changed their name from Squaresoft to Block, or Square to Block, not Squaresoft. That's a company that makes video games. But anyway, we always look for these disruptors, and when we get into this one, it's a monthly chart market structure, and this has the old. People see this as the head and shoulders here. It's a big old reversal. Will it get back to $8? Who knows? But we do have a pretty good shot at punching out of this resistance area and hitting the high eventually. Maybe we get a reversion trade on this, but this accumulation hasn't really shown full market structure yet. It may just give us another low. So this one's not as disruptive on that scale in this sector. So PayPal tends to kind of trend a little bit similar to this. So if things aren't looking so good for SQ in the near future, then we would expect a nice descending channel out of it. But if we breach this $65 area and we start to run for this range, we end up with a measured move here. So we get this whole range. I always take it to the mean. We have a possibility of a breakout trade, so keep this on your radar as well. As I said again, it's kind of in that disruptive space, and then that 1-for-1 kind of sets us up for about half this trend back or so. So things could get exciting above $65 and maybe shoot for, maybe a $70 target or a $75 target depending on the momentum. So keep it on the watch. Again, historically, this month tends to be bearish for a lot of things, so it's kind of how it is. You kind of got to watch it by sector. Another surprise yesterday on our breakout scanner was Teva. Things in the Middle East we know are tense right now. We know that Teva has basically given us that beautiful market structure accumulation. This is what we'd like to see: a short squeeze, nice accumulation, test of range, and then a second push. And this is where we're getting that second push. Short-term target on this thing, about $21, right to the red line here. Essentially, this was when we were looking for the short. This pivot's been here forever. Us bullish bears, we took this short and did very well with it. Now we're kind of on the outside of market accumulation after market structure, and this is that second push that we look for. So very typical. We have a very nice primary here. If you measured this whole thing, the secondary would be up here. I just decided to do this part of it because this is already breaking it down for a 1.5, where it found resistance and came back for test. So if you wanted to put a pivot through that line, you could stick one right about here and then drill into the 2-hour. So if we hold this area, or generally as support around 18.5, we have a pretty good shot of shooting that $20 bill and maybe a little higher. If things reject here, this could also give a nice half back and give a short, back to about 1750 or even 1650 thereafter. So definitely gives you volatility, and volatility is good for traders. So short term, we're looking for maybe accumulation and a push up to the red line here, about 20 bucks, $21 or so, give or take. But if it rejects here, we could see it pull back and split the difference first. So be nimble if you're going to scalp this one. But so far, I mean, that bull trend has been pretty strong. So it kind of owes us a little pullback here. But definitely keep this on your watch because it's likely to break out and continue higher after this accumulation. Long-term, medium-term outlook, as long as it holds those areas, we got a pretty good shot at continuing this bull trend. So be mindful of that one. Let me go back and revisit a few from last week, and we looked at a couple of interesting things. So we had Tempest here, and we basically hit our bull target pretty well for giving this back to this pivot area. Eventually did it, but now we're looking for the failure of this breakout from the wedge here. But it did give us the breakdown. And if I were to draw this as an angular instead of a pivot, it gave us that measured move impulse. Here, tested support, went back to our regression line. If this is going to remain bullish, it has to get back above this angular resistance area here and sort of take us into a trend. It hasn't really given us the full market structure yet, though, so look out. If things get bad, we could see this come down. This is in that AI space, so we know that things are getting scrutinized now, and some things will come out of the woodwork. So if it breaks this level, we could have a pretty decent short opportunity on that, but just be aware that it can also give us some scalpable range. So return to mean would be about to this pivot. It hit that in the open today. It's already printed a really big wick there. We knew there were sellers here. Pretty easy to spot. The 5-minute chart gave us a great range trade, and that's about it. So look for this to accumulate back to support and maybe give us one more shot at pushing bullish on this. But we were right in taking the short-term bull trade and did pretty well with part of it. But for now, I'm a little skeptical that it's going to maintain this trend. But if it continues to get rejected off this regression line, we could see some bearish moves here. Stay skeptical on it, but definitely look for some good day trade and swing trade setups on it soon. NVIDIA, man, that got chewed the hell up on Monday. Holy smokes. Or, sorry, Tuesday. And those are some pretty big range candles, but they came right to an angular support area. 102 would have been a great buy, but it didn't quite hit that yet. Doesn't necessarily owe us that. It's gotten close enough. We always kind of keep eyes on opportunities like this for some wheel trading to sell some calls and puts on. And I think this range is kind of giving us some accumulation to maybe make the threat of a half back here for the short term, back to like 117. But if it rejects this liquidity zone and this kind of starts to look like a double bottom to some people, pardon me, didn't want to cough my lungs out into your ears there. So if we turn this from what some people see as a reversal and end up with a bear flag, we could certainly go lower. I know that the leveraged ETF into this is kind of getting beat up with it, but I would love to purchase NVIDIA at about 90 bucks. Just saying, personally, nothing against Matthew's leveraged ETF on this thing, but price action's price action, and this is a critical area. This gave us half of this trend back, and it's holding here, but be skeptical on whether or not it's going to bounce here. I would say it's likely to at least test the 102, maybe test the 92 if this gets rejected too much more here. So definitely be skeptical on this whole sector with AI being involved. Chips are kind of getting their butts chewed on. I gave a shout out to a great company. I love this company, but again, we don't let emotions mess with our trading. That's kind of a thing that everybody says. Not everybody practices it very well. But short term, we pretty much got our target. We were expecting maybe a measured move here. We got close and pulled back. Now we've given more than half of that back. We broke the 2750 pivot. We hit the previous lows, and we got a couple more pivots to go if things remain bearish. But watch for some buyers in this area. If we close a daily candle with a nice little wick here, if this kind of snaps back up, you can see these other two candles kind of stop there. We call that a zone. And if we see this kind of hold this area on the close today and then start to give us some possibility of being bullish in the near future, that's where we're going to look for it. And we'll go with the dark orange. There we go. Otherwise, if it does trip this wire, we do get half this trend back. We run right back to that 2380, which is about the middle of this trend here. So certainly be a little bit nimble in today's market conditions for this whole month, and be pretty much ready for anything, but know where those targets are. That's kind of half the battle. If you know where the targets are, you can take a trade on it. Glance at the chart, do some analysis, plan your trade, trade your plan. All that stuff comes into being words to live by when it comes to living as a trader. So yeah, keep an eye on this area. If we close this bar for the day at the top of that range, cool. We could be bullish tomorrow to give half that trend back, maybe make a shot at 2750 again. But this open, pretty much tapped that and rejected it. So wait for this to give you a signal on whether you can go long on this or not. We gave this nice scalp last week, but this is looking to maybe consolidate back in this area again. We'll get a trade out of it soon enough. Let's see here. I can kind of drag it out and give a couple other looks. Let's look at some other things in this space. Let's see here. There was NNE. That was pretty much gave us most of our expected move and then came back down under that angular. Ended up being a good short. And now we've got some structure in here where we've got this nice primary and secondary move. About $7.30. If it holds here, we could get that right back up to about 870. I'm going to borrow this pivot here and drag it down and then zoom back out. Check this out. Oops, daily. So if that accumulates the mean of our previous consolidation here, and this were short-term market structure, this is kind of the tripwire, and it broke it. So we're likely to probably retest this low here and maybe accumulate into one more squeeze back up to this range here. So I'm going to keep this on the chart. This will give us some decent little swing trades, but if things get eaten up where we end up revisiting, IPO lows here, that could spell trouble. So we could see the AI space again getting kind of soaked up. But watch this area and where it currently is. Eventually it'll give you a long-term trade and maybe start to trend back up. But this is going to be some areas of interest down in here first. So I'll, of course, mark a pivot basically right at the base of that candle. If I can get my drawing tool to work. Right in there. And if you measured this bar, that would give us a bar spinner bar setup. So if it holds here, cool, we could see a return back to those highs. But if it breaches, turn that sucker red. Because if you breach that, that is the low of this accumulation here in history. There will be some people wanting to get this lower and possibly short it back to the IPO low. So just be very cautious in that one. Let's see here. A couple other mentions we had. We had Viking Therapeutics. Kind of met our half target. Did its thing, rolled over. We knew that there was a channel here. We knew that if things failed to break out the measured move impulse, and they certainly did, this was going to be a decent short. Now we're headed for regression line. Kind of split this channel again so you can find your day trade setups. So you can take and just draw an extra line in here. right about halfway between the two. So for the day, we could probably target about $54, $55 or so. And if we breach that, well, we'll just trend it all the way down to the regression line, why don't we? This is basically the same exact structure we saw on QQQ, just a descending channel. I like to watch these because they do eventually provide some good bullish scalps, but for now I'm a bit bearish on this one, at least to this line. And this is not completed, this one-for-one measured move yet. Here's your primary accumulation. Secondary would take it right to that, or just above it. Let's see here. Pure Storage was kind of a skeptical setup. I recall being a little bit opposed to the bullish argument on this one last week, and it certainly kind of rejected and gave us a breach of that previous liquidity, and now we're heading for the angular here. So watch for around 45 bucks. We could see this thing bounce off support and come back to regression, give us about half that trend back. So keep it on the radar. When everybody else is seeing a seasonality-wise month of quote-unquote bearishness, it just provides opportunity for investors and the buy and hold crowd to kind of take advantage of some discount prices. There will be buyers eventually, so knowing where those zones are is very important. And that is about where I'd expect to be a reversion of this entire really choppy as hell bull trend here. So eventually it all ticks together. And way back in the day when we were still beating on Kramer, we noticed this diamond pattern. We picked off the bull trades on this thing before. It did very good. We did very good with it. This was kind of unexpected to run this high, although I probably could have just stacked another measured move and found that target. But reversion, pretty plain to see, and we've broken it. So watch for support maybe in here, possibly an extension a little lower, and then maybe we'll get a long-term opportunity to go long on this thing. But look further left. You do have quite a few things to return to, and this thing has been around for quite a while, and market structure never really did its thing on this one, so we could see this get capitalized all the way down, so always be ready. Well, let's see if anybody maybe tagged a ticker on our chat here. Nope, nothing doing. All right then, if you don't have any questions, we might just wrap it up. But let me see if there's one more. Pull up my list here. Hold on one second. One that showed up today. There it is. Oh, where was that? There it is. Oracle. I glanced at it this morning and then just never looked back. This thing is gappy as all hell. It's very difficult to trade for most. Its very surprising moves are very typical, but if you think about things in structure, giant weekly cup and handle. There's your cup, there's your handle, there's your accumulation. We broke out. It's given us this range here into this as a high, came back, gave half back, found support, and we're running for probably the 86.6 fib of this bar. I'll do some live analysis here because I don't have a single line on this chart. So look for a move to continue running a little bit more to about 144.5 today, perhaps. But if this closes a daily doji here, look out for a range trade in this thing, and you can clearly see the broadening pattern happening here. So if this thing gives us what we think we're starting to see, we can make use of that. Pardon my sore throat this morning. It's been a rough ride. I went and saw a concert last night, so I'm a little screamed out, so to speak. Had a great time, though. So anyway, if this broadening pattern breaks this resistance and we close a daily doji here, which we're likely to, we may get a nice pullback. We may even get a third bar back down to the base here, about 138.50. So I kind of like this for a swing trade setup in the near future. If it can hold that area and give us the setup for continuation. Let me get into 2 hour. Here we go. So this morning we did see a nice breach here. A nice high wave was printed. Daily will probably be a doji. We usually will see accumulation through the rest of the day on something like that. The half back is pretty easy to spot, and in time, give it a couple days. The regression line on this broadening pattern kind of meets it. So look in the next week, maybe we get a short-term bearish move on this thing to get back half of that trend and then accumulate. Maybe we get a breakout trade on this thing. Just kind of popped up on our scanner this morning from that open, and it gave us a breakout indicator. But ultimately, I think the first midterm, short-term target would be probably around 144.50, just that 86.6 fib here. I never get exact numbers out of those, but I get close enough to know that I can just dope it up on a chart and make a quick trade plan. But long term, I think this thing's going to give us some good action, and overall, eventually we'll get a trend out of it one way or another. Has it done the full market structure thing? No. I mean, no, except back here. You got to look all the way back to 1999 on this thing. The dot-com bubble break, right? So gave us that structure. We got the roll down, the new low discovery. We got that range. We got a squeeze, another squeeze. It accumulated forever, and then it eventually trended out. Well, then we get this mess. So current market structure says this should give this back, but it doesn't necessarily have to. The company is barely successful overall. So, you know, when people are seeing success, they tend to invest in it. And overall, this thing's going to give us a decent setup here. Either we're going to get above that 86.6 fib and give us a nice primary and secondary setup, or we get a big old measure move out of it, or we sit and accumulate for a while. So I'm going to leave this on the chart like that. And if we breach this line, we could get some extension targets up here like 146, maybe even go to 150, 350 in the long term. But watch this range for a while. It'll give us a setup eventually. All right. Well, I think that's about it. We've got a whole, another 3 weeks ahead of us in this month to just kind of wait for things to simmer and accumulate and eventually give us some decent setups. But in the meantime, just be nimble. Trade the price action. There's plenty of it out there. And, you know, to say the least, QQQ has been giving us some great trades lately. As well as trading the futures on the NQ. And we love the volatility, and seasonality kind of does have an effect on that. It gives us good range. Lots of volatility pays our bills in the short term. The long term, we can get some buy and holds and maybe some wheel trades in the near future. And I think probably by the third week in this month, we're going to have some decent setups, give us some good follow through, and maybe remain possibly bullish towards the end of the year. Let me take a look at SPY real quick before I go. You know, we get these rounding tops and we know better than to short them down things. And as long as they stay within the range bars, they usually play well. But the reversion is down here. And that could be, you know, trouble for the mean of the rest of this month here. But once we start to see some accumulation, we could resume the pull trend into the end of the year. But be aware that we've been pretty damn parabolic for a while. So, you know, eventually we may give half back of this. And if that's the case, we can always change our minds and make some killer bearish trades towards the end of the year. We'll see. Well, thanks again, guys. Stay green, and hopefully everyone does well. The cliche like and subscribe thing just doesn't sit well with me. I just say pay it forward. Tell your friends that we give some pretty damn good trades on this show every week. And I know that we're not going to see a lot of great ones this month, but we'll be able to give you the skinny on what to look for and stocks to watch. So we can certainly keep ahead of those. And I think next month we're going to have some probably better long-term swings come out of this. So stick it out through this month, and we'll see next month give us a lot more opportunity for you long-term traders. For all you short-term traders, we love the price action. This volatility is gonna be great, and I think we're gonna really enjoy it. So we'll see you around. We'll be back next week, and then eventually we're going to start coming on twice a week. We're going to look for Tuesdays and Thursdays, and Tuesdays will give us some decent swing trade setups for the week for us overnight and day traders, and then Thursdays will give us an outlook on longer term stuff because we usually have enough data from the previous existing week to give us the good setups for the long term people to trade.